May profits be upon you. Welcome to another weekly market forecast. We're going to be going over the indices, the S&P, the NASDAQ, and the Dow. All right. We'll take a look at the economic calendar first. And all I want you to see is that this week is void. All right. It is void of the high impact news drivers like the NFP, the FOMC, the CPI data, and interest rate data. So we have some liquidity. We got some liquidity flowing through the markets, but it won't be the kind that you have to be careful of. Okay, we got we don't want to take a trade before this particular news, like CPI data, and for the U.S. because it may reverse on us or something like that. We don't have to do that this time. We just have good liquidity coming into the market from Monday through Friday. All right, and each day we'll have some good opportunities. It'll be a little bit more calmer, in my opinion, than what we've been seeing in the last couple of days. All right, so that would make for better trading conditions. Now, in the S&P, we're starting at the monthly time frame, right? We're going to do top-down analysis, right? Okay, so what we have here is the markets since this high in December of 2021, we had the pullback, and then we broke structure to the upside. We've been bullish ever since. Very nice price action up to the all-time high, right? What we want to notice is that at this level of the breakout, all right, this created the area of fair value, which price likes to come back and offer fair value to, at rather, because in this move up, you would say, oh well, just mostly buyers participated, but price usually brings the price back to these areas to offer fair value. Now, if it's not offering fair value, it is looking for liquidity. It is looking to swipe liquidity. All right, and right now it looks like we have bent. We have bent around, turned around, and look like we are heading towards this area once again. And what I want you to take notice of is it did pull back here. It did pull back here to the same area, to the same price levels. Okay, so that is something to keep in mind, right? And we have this low, this would be a nice draw on liquidity at those lows. All right, now also let's get to something important here. You see this low here? Price came down, swept this low, and we have this. It looks like it's showing respect. All right. The deal is this was a bearish PD array. All right, a bearish discount array. That price came down, swept into, and looks like we may be bouncing from. All right, but if we look at the NASDAQ, it did not take that low, right? Did not come down here and take that low. That is SMT. All right, that's a smart money technique. That is divergence, and this is a bullish indication for me. All right, because usually ES or the S&P leads the party, leads the dance, and it tends to be a little stronger than the NASDAQ. While the NASDAQ is it seems to trail it in the larger picture. All right, if I can get rid of that, that'd be great. Why do I have so many lines? You saw how long I was there trying to get rid of that? Okay, so I like the fact that there was a low here. Price took the low, and what we expect when a low is taken, or a liquidity low is taken, we expect a pullback. In the near term, I am bullish. In the short term, I am bullish. All right. But we've been bearish. That's has been the order flow. Now you see how this candle here is big and aggressive. I'm going to look on the lower time frames inside of this to see if we have bearish fair value gaps that are being respected or disrespected, or that would set up a move that price could pull back into and then drop from. Let's go to the weekly. And what do we have? Aha! We have, you like that? Aha! Aha! All right. So what we have here is a bearish fair value gap here on the weekly, and price closed below this previous candle, or below that previous candle's low, which would indicate more bearishness. It's not a breakaway gap, all right, because look how it closed itself. The buyers are defending this low, all right, and buyers are defending this low or reacting from it, and you see it was swept for liquidity. We may have enough fuel for a pullback into this bearish fair value gap. You see how last week's candle closed? Very indecisive, all right, and it's an inside bar, a candle that is inside the high and low of the previous candle, all right. What I'm looking for with this, because it closed bullishly, inside and towards the upper half of this candle, I'm looking for price to take that high, and that's why I have it as a the previous weekly high. I have that as a draw on liquidity. I have an idea on this. All right. I'll refer to it in a little bit. Okay. So in the grand scheme of things, on the daily, what we can see is that price broke that low after making these highs and came down. We are bearish, right? We are bearish. We are in a pullback situation here. Price consolidated here all week last week. Chop, chop, chop. If you got involved in that, you probably got chopped up too. I lost a trade in that mix. All right. But I am looking at this fair value gap as a draw, as this is an external discount array. All right. But it is an external low, and I'm looking for an internal move from external, ERL to IRL, external range liquidity to internal range liquidity. I'm looking for this move. All right. Do I have anything to encourage said move, that narrative? Yeah, I think I do. All right. One, that draw to the weekly fair value gap. Can you look inside of this move here? There was this imbalance candle here representing supply zone, a supply zone. We tapped that supply zone. There was a bearish fair value gap that was disrespected on the way up. That is a bullish indication. We've tapped this this supply zone a couple of times already. Tap, tap, tap. All right. This is being used up, and we're not it's not going to get any stronger. It's actually weakening it. All right. It makes me think that we are headed towards this gap and that high. All right. And look how the Friday's candle closed, very bullish. All right. We came down, swept. No, we didn't. We didn't quite sweep this low. This is another SMT. Look at here. This low that was made on March 18th, Tuesday. If we go to a NASDAQ, we can see that we took that same low Friday. We swept it and we're moving up. Now that's interesting, right? Why did the NASDAQ sweep that low and not the S&P? Well, the S&P, like I said, it's a little bit stronger. It tends to be a little bit stronger. So it doesn't need to come down here and sweep this low, especially if the NASDAQ had the same reaction, but swept that low because it is weaker. All right. So I'm looking at this as an indication of strength, and that price will probably head up to the previous weekly high, the high of last week, the same way I'm looking at it in the NASDAQ. We swept the low, and we're seeking liquidity. I'm looking for price to sweep that high on its way into that fair value gap. Again, this is showing short-term bullishness. I'm looking for short-term strength into that fair value gap, and we'll see once it reaches this weekly fair value gap if we get that move down. If price gives us that signature that says, okay, we found resistance, we break down and pull back, this would be a high probability trade, in my opinion, to the downside. But we have to wait till price proves it to us. Now, I want to show you something on that idea. If we go down to the 4-hour time frame, you see I have the buying tool here, the trading tool here, and I'm looking at an idea here. What is the idea? It's on the 1 minute. On the 1 hour. That's where the idea is. I want you to tell me in the comment section. Go down to that 1 hour and you tell me, what do you see? Why do you think I am encouraged to put a TP, an entry, and a stop loss in this area? Why? All right. And tell me what your comments are. And let me know if you think it's a wise move or not. All right. Now, what I want you to notice on the 4 hour on the S&P here is every time when we came down, we make this low, we make a high, we make a lower low, and then we break and make a higher high. All right. That is a market structure shift from bearish to bullish. And I love to see them. All right. We take the high, we pull back into an area of demand, respond to it, we make a new high. Boom. All right. What am I looking for? I'm looking for price to do the exact same thing. Look at the area of demand. It comes down to that demand. All right. And we see a move towards the upside. Now, I want you to be very careful over here. All right. Because what I'm looking for is this move down, the sell before a stronger buy. I'm looking for this area to be created as an area of fair value, but we are in the middle of chop. You don't like you shouldn't be taking entries in the middle of chop. All right, because it can go either way on you. All right, so be very, very careful. All right, especially newer traders. All right, like I said, I have an idea here. Tell me why you think that idea will work or not work. Okay, go down to the 1 hour and you will see that. All right, but I think the move is towards this drawing liquidity, the previous weekly high, and the same deal with the NASDAQ. If I'm going to take a move up, if I'm going to take a bullish, try to take advantage of a bullish move up, I'm going to take it in the S&P because it's stronger. All right, I'm going to take it in the S&P because it's stronger. All right, if I'm going to short an indice, it'll probably be the NASDAQ because it tends to be a tad bit weaker. It tends to trail the S&P. All right, now again, we're in the NASDAQ. It's the same situation. You see the chop. I'm looking for price to continue this bullish move here. All right, I'm looking in this wick to say, do we have bullish fair value gaps or something that'll say, hey, price is heading up. All right, well, we have the development of an area of fair value, except on this one, the NASDAQ has already taken this high. That's already a close above this area, which would mean a market structure shift. But we are well within this range. All right, we haven't made a new high, we haven't made a new low. Actually, technically, we did make a new low here. All right, so the lows are swept. I'm looking for price to head up towards these highs for the next liquidity sweep. We already have shown a market structure shift here, and I'm looking for price to find support in that to go higher or continue higher from here. It's that simple, and I'm looking for it. I'm not going to jump in ahead of it. I'm not going to do nothing crazy. All right, let price prove that it is definitely going up. All right, I want to see this wick get filled, and I want to see price keep this low as a protected low. All right, there's a sell to buy wick here on the lower time frames. This is demand. I don't want to see price get past that. I want to see this kind of move. You understand? I hope you get it. I hope you get it. If you don't, make sure you leave a question in the comment section. Now, if we look at the Dow, you see this move here, right? We have this. I'm on a weekly time frame. We got 1 week, 2 weeks. This was the move that we saw in the other two indices. We see that it also took this low. All right, it also swept this low, and we see the inside bar here. Okay. Why do I have it? Why do I have this area circled? Because it closed what should have been what was the bearish fair value gap in the S&P and the NASDAQ. All right, that kind of tells me that there's no ceiling for it to bump into. All right, there's no the resistance is not going to be to the same. It won't be the same strength as in the other two. All right, there is a fair value gap a little bit higher. All right, now the Dow does tend to do its own thing sometimes, so I do still look at the same kind of price action that we're probably heading towards that internal target of liquidity, as we have taken a external range liquidity. I'm looking at, come on, man, will you stop it? I'm looking at this as external range of liquidity, and I'm looking for price to pull back into the internal range liquidity. All right, and but we do not have a fair value gap in the same location as the other two. And I find that very interesting. Now, you see this fair value gap that was here, all right, on the daily, it has already been tapped into, so it's a non-factor. Price could still have a bearish reaction in this area because it's taking a high, and after a high or a low is taken, you expect a pullback. Well, we did pull back here. We came down, swept the low of the consolidation, but we still have a very bullish reaction of respect wick here. I'm not expecting that wick to be filled. I think it's a higher probability that we'll continue higher to take the previous weekly high out, and maybe in as we are on our way en route to mitigating this internal range liquidity at the weekly fair value gap. And once we get there, we'll assess how price reacts to it, right? If we get there. All right, we still have to go through this area of demand, supply. This is a supply zone right here. Let me get this straight there. Thank you. All right, we have a price just tapped into this supply zone, but we didn't get that bearish reaction, that hard bearish reaction. There's nothing aggressive about it. Actually, the bulls seem to be defending. So I'm thinking that this is going to lead to these highs getting taken out as low resistance liquidity run here. I'm looking at price going up into this fair value gap, maybe pulling back and then continuing higher. There is that potential, something like this. All right, but what has to happen here is price has to form an area of demand to break this fair value gap. But that's a whole lot of stuff that probably won't be happening next week. I'm just looking for price to quite possibly reach this area of fair value. I hope you like this video. Make sure you hit the like button. Make sure you go down to the 1 hour on the S&P and tell me what you might think I might be thinking. And thank you again for watching. And I will see you in the next video. trade carefully next week.